Nvidia's latest 13F filing is out today. Nvidia notably added 2 new names. Is this an opportunity, or should you pass on this? I have the details on these 2 companies that you need to know, and really the only details you need to know, whether or not I am invested in these companies or not. One of these stocks went up 7% today. The other one went up over 80%. In fact, I like the one that went up 7% a lot more than the one that went up 80%. And I will break down all of the details for you in this video, including the positions that Nvidia completely sold out of, the positions they added to, and the positions they reduced. One of which was ARM, in which Nvidia sold over 50% of their stake in that company. So Nvidia, they reduced their position in ARM by 52%. 52%. They reduced their position in Applied Digital by 7%. That was seen as very good news today. Applied Digital up over 15% today. Recursion Pharmaceuticals, another big winner today, up 3%. Nebius Group, one of my favorite stocks right now, while Nvidia bought $33 million worth of this company, about 1.2 million shares. That is a completely new buy. WeRide is also another big addition today. That stock up almost 100%. They bought about $24.5 million worth of WeRide. Serve Robotics, they sold out of completely. SoundHound AI, they sold out of completely. And NanoX Imaging, they sold out of that completely. Now, again, as I have shared with you, NBIS or Nebius is one of my favorite stocks right now. George Soros and Soros Capital also unveiled a new position in Nebius today, making up 2.7% of its portfolio. The fund holds 630,400 shares in Nebius. And yesterday, Nebius subsidiary Avride announced that their delivery robots are now live in Jersey City. This marks the company's 3rd city with Uber Eats and the first to feature autonomous deliveries in the East Coast region. Now, this news that Nvidia bought a stake in Nebius is not exactly unexpected, and I think that's why the stock is only up about 6.5% today. Because in fact, in December of 2024, it was reported that Nvidia did take a stake in Nebius, or at least they participated in the $700 million placement that Nebius was doing. So we didn't know how large of a position Nvidia took, and I think that's what is causing the positive reaction today. I mean, Nebius is now the 4th largest company in the Nvidia portfolio, and well, you've seen Nvidia sold out of completely, like SoundHound and a couple of other well-known companies they've been invested for over the past couple of quarters, and replaced it with Nebius. And I think that's why Nebius is higher today. Although if you've been a Nebius investor, this is not really a big shocker. Now, Nebius will report earnings for Q4 and full year 2024 on February 20th, 2025. So coming out next week before the market opens. Analysts estimate earnings of a negative 39 cents per share for the quarter, reflecting a year-over-year decrease of 214.71%. The company has forecasted annual recurring revenue of $500 million to $1 billion for 2025, driven by strong demand for its AI infrastructure services. Nebius recently raised its revenue guidance, projecting an annualized revenue run rate between $750 million and $1 billion by the end of 2025, from prior estimates of, again, $500 million to $1 billion. I think the question is, heading into next week, short term, does Nebius change their guidance here? I think either way, I mean, keeping guidance where it is, still a win for Nebius, given where its valuation is at. Nebius currently has a valuation of about $10 billion. So if they can hit their $1 billion annual recurring revenue target by the end of 2025, that's going to put the stock at about 10 times sales, which for a company that is expected to grow revenue over 600% this year, going from about 50 million in revenue last year all the way, to 750 to a billion. The midpoint there is like 850 million or so of ARR. So technically coming in at like a billion would be higher than the average kind of projection or the midpoint of guidance. It still makes the stock a pretty attractive acquisition from, I believe, a valuation basis. Now, also worth mentioning, the company has zero debt, which is always good to see. And when you look at how the ownership is with this company, the CEO is the largest investor, okay, which is always great to see. But you also have another longtime shareholder that owns a good portion as well. And I think that's one of the biggest things you can look at when investing in basically a startup company is, do the executives have skin in the game alongside shareholders? I think that is one of the most telling indications of whether a company is actually excited or bullish on their company. Arkady Volsh, he is the CEO. He owns about 31 million shares of Nebius, owning about 13% of all shares outstanding. Vladimir here owns about 4.5%. So just these two insiders alone control about 17.5% of the entire company. That, to me, is a pretty good sign of confidence. Also worth mentioning, today you have had 44 different trades from hedge funds and institutions in the options market, totaling $22 million with a positive order value of 97%. Over the past week, you had 187 different trades, totaling $82 million with a positive order value of 94%. I mean, the bullish activity in this stock's options are just insane. I mean, if you look at January 16th, 2026, so about a year from now, if you look at the volume today, it's 95.5% calls, 4.5% puts. The open interest is 81.5% calls, 18.5% puts. People are very bullish on Nebius. And even if you look at April 4th, the option expiration that just opened, 100% of the open interest is calls, 0% of the open interest is puts, and a volume today is 81% calls, 19% puts. People seem to be pretty bullish on this company. Now, Nebius is the former Yandex, the Russian Google, before their stock was halted from U.S. exchanges, and then essentially Nebius was called up, and given like a 3-day notice in November of 2024 and told they were going to be relisted on markets. So they really didn't get to do the whole IPO thing and even really like raise capital or do any of that. So that's why the stock is under the radar. Now, I believe with Nvidia taking this official stake in the company, that is likely no longer going to be the case. You're going to get more analysts that cover this stock. And currently, there's only one price target on the company. It's a $51 12-month price target. But that's it. For a $10 billion company with zero analyst coverage, it's kind of insane. So as far as Nebius, I actually love this company. I think the stock could be anywhere from $80 to $100 by the end of this year with a moderate amount of new coverage on the name, a decent amount of, exposure. You could easily get a double, in my opinion, by the end of this year. Now, as projections for 2026 start to come out, and maybe we hear some of that next week, which would definitely, catapult the stock higher to say the least, you could get the stock into, the multiple $100 ranges by next year. Now, obviously, execution is important, and Nebius is doing the right things. They are in AI software. They are a data center provider. They have their AvRide, their autonomous delivery robots, as well as their EdTech technology. Now, none of that other stuff you really incorporate into much of the valuation. It's really just Nebius, the hardware side and the software side that investors pay attention to. So AvRide, EdTech, and some of the other businesses that they own are kind of like lottery tickets, if you will, for Nebius. Not something people really pay too much attention to. Nebius is also projecting to be EBITDA break even by the end of this year, which is earnings before interest, taxes, depreciation, and amortization, which basically just means the business itself should be profitable by the end of this year. Meaning that day-to-day operations, you should be profitable. Not including taxes, not including depreciation, or any of the other maybe one-time expenses. The business itself should be profitable by the end of this year. So again, as far as Nebius is concerned, I think the stock is going much higher, especially as this thing gets talked about more and really gets put on people's radar. It's just really not a stock that people talk about. It has essentially zero analyst coverage. It's been mentioned on CNBC one time, which did cause the stock to get quite a bump. It was up like 10% the next day. But yeah, it's really an underlooked, AI gem, I think, which is kind of rare to get. And I do believe 2025 is going to be about AI software more than like semiconductors, which Nebius is perfectly positioned for that. And I think that's just going to be a wave of hype that comes this year, not something that necessarily like is fundamentally driven. So my stance on Nebius, pretty clear. I bought a lot of shares around the $30, $32 range after the whole DeepSeek situation came out, and the stock fell 37.5% the next day. So yeah, I'm very bullish. Got about $30,000, $35,000 or so in this company. It is high risk, high reward. This is a potential 10xer in the next couple of years, or this is something that could utterly fail. At this point, though, I think you're getting a steal of a deal, in my opinion. Now, as far as WeRide here, this one's interesting. WeRide Inc., also known as WeRide, is a Chinese autonomous driving company that specializes in developing level 4 autonomous driving technologies. The company was founded in 2017 and is headquartered in Guangzhou, China. WeRide focuses on creating autonomous vehicles that can operate without human intervention in specific areas such as designated zones or routes. So think of like a Waymo, like mapping the roads, the streets, and operating an autonomous ride-hailing service. It says their technology integrates sensors, artificial intelligence, and mapping data to enable self-driving cars to navigate complex environments. WeRide has partnered with various companies, including Renault and Nissan, to test and deploy its autonomous driving systems. The company has also received significant funding from investors, including a $600 million Series C funding round in 2021. This is the company that is up 86% on the day today. This stock went from about $15 per share up to $42 per share at the high of the day today. And the big reaction, I think, is really just nobody expected that Nvidia was going to be investing in this company. Now, they only put $24 million into this stock. So like it's pennies compared to Nvidia. I don't think it's something that is too serious. But this company now has a $10 billion valuation, which is kind of insane. Now, I have a couple of issues with this. Okay, WeRide, their expected revenue for 2025 is not explicitly detailed in the provided search results, says Grok. However, based on analyst forecasts from Wall Street Zen, WeRide's revenue for 2025 is projected to be approximately 138.64 billion CNY, with estimates ranging from 106.81 to 170.48 billion. Now, these numbers may sound big, but it's actually like $40 million. The first half of 2024, WeRide reported about 21 million US dollars in revenue. And for the trailing 12 months ending September 30th, 2024, total revenue was $56.84 million. So even from a valuation perspective, it's very hard to get behind this one. That is a price to sales ratio at current valuations of 175. So that would be like Nebius, 17xing to have an equivalent valuation. That would be like Nebius as $748. That's kind of hard to swallow at this point. That's my first concern. The other concern should be obvious. You can't really invest in China. Why? Because they do not audit. Okay, so you have no idea what the numbers actually are. And at any point, I mean, the communist government can say, oh yeah, you can't be listed anymore. Or, have a problem with the company. It's just way too risky from that perspective. And especially after the jump today of 80+%, there is no way in hell I would touch WeRide. Now, also worth mentioning is Nebius is a company based out of Europe, and they have no affiliation anymore with Russia, and they will have auditors and the necessary requirements that the New York Stock Exchange does require. So out of the two, it's Nebius, hands down. And I actually think there's a lot of opportunity with this one. And again, the stock is just not reacting as crazy to the upside because we already knew Nvidia took a stake in the company. You can see, I mean, you're going to have new articles here, but Nvidia, took a stake in Nebius like months ago, but we didn't know how big. Nebius says here, they announced oversubscribed strategic equity financing of $700 million to accelerate rollout of full stack AI infrastructure. And they also mentioned that Nvidia was one of the investors. Now, what oversubscribed means is they offered $700 million and people essentially threw money at them. Okay, like there was more demand than they expected, which is a obviously great thing. And it's kind of hard to pull up. Yeah, here we go. It's kind of hard to pull up the more archived article given the news out today. But it says here, Nvidia among investors in $700 million capital raised by AI firm Nebius Group. And you could see this news on December 2nd, 2024. And that's why you're just not getting the big shock and awe move from Nebius today, because we already knew Nvidia was an investor. But I do think this does pave the way for a lot more attention in Nebius over the coming weeks and months, and will spark more analysts to initiate coverage in the company, which has literally zero analyst coverage. There's only one analyst that has a price target on the stock, but it doesn't look like they've done a lot of actual, research. It doesn't look like they're a big coverer of this name, to say the least. So I think there's a lot of opportunity here. Let me know what you guys think down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.